Welcome, everyone. My name is Tony Martinez, and tonight, we're going to be discussing what you can do, what can be done if you or someone you know is facing foreclosure here in the state of Florida. I'm going to be recording this session, and it will be made available to anyone that pre-registered for this webinar. Before we start, there are a few disclaimers that I need to go ahead and share with you so that we're all on the same page. This is for educational purposes only. I am not an attorney, nor am I a tax professional. No legal or financial advice is being presented here today. Now, that said, let me introduce myself, who I am and what I do. I am the co-broker and co-owner of Xtreme International Realty here in Florida. We have 5 locations and about 240 sales professionals that work with us. I am also the founder of the Florida Foreclosure Prevention Network. Let me explain what that is. We're non-governmental. We have nothing to do with any state or federal government agency. This is a private organization. Every single day of the week, I'm teaching real estate professionals how to work with distressed homeowners. And what I've done now is form an elite group of individuals, and this is going to be done on a state-by-state basis, that are truly, truly committed to an outreach program to reach out to as many distressed homeowners as possible so that everything can be done to help them avoid foreclosure. I'm also the owner and chief instructor for the Certified Distressed Property Expert designation. This is an educational program and designation for real estate professionals. What I basically do is teach real estate agents how to approach individuals that might be going through a difficult time, how to help these individuals potentially avoid foreclosure, and more importantly, if we can help them stay in their homes, even better. Throughout my long career, because I've been around for a while, I think this number is actually very conservative. Easily, I have trained at least 25,000 real estate professionals. This presentation is a little bit different because it's not intended for real estate professionals. It's intended for consumers, for individuals that are currently struggling to make their mortgage payments. And one of the first things that I like to convey is you are not alone. And it can feel that way when you're going through the foreclosure process. And look, I know, I went through it. I know what it's like to not know about your future, to be uncertain. I know what it's like to lose your home. Actually, I lost several properties during the great financial crisis. So it can feel like the walls are closing in and that you're alone, but you're not. You absolutely are not. Foreclosure numbers are definitely on the rise, especially in Florida. It's not really getting the media attention that it should, but without a doubt, the numbers support this. On any given month, Florida, especially the Miami area, Orlando area, Jacksonville area, western area of Florida, where Florida's in the top 10 consistently. And there have been months this year where Florida has actually been #1 in foreclosure activity throughout the country. So the numbers are increasing, and they're increasing for a variety of reasons. A lot of folks are struggling right now, trying to make their payments as everything in their life seems to be costing more money. We have insurance payments that are going up, premiums. We have property taxes that continue to rise. We have homeowner associations that are continue to raise their prices and assessments, not to mention what you're paying for gas, for food, for just about everything. So it's becoming more and more difficult for individuals to remain current on their mortgage payment. And the outreach that I'm doing here is to try to get one thing and one thing across to everyone here, is that foreclosure is not the only option. Sadly, too many folks that are going through the foreclosure process do not know what their options are. It can become so intimidating and so terrifying that oftentimes it's just shut down. You just shut down and you don't even seek out assistance. You don't go out there and get the help that's necessary, help that might help you actually stay in your home. And if that's not humanly possible, wouldn't it be better to exit your home with dignity as opposed to being shown to the curb by the sheriff? And that's my passion. This is why I have invited many of my CDPEs from across the country to be on this call, to kind of be a fly on the wall, because I have a vision, and the vision is that on any given day, any given evening, in the next few months, there's going to be a multitude of these courses, these webinars that are going to be hosted by my fellow CDPEs as a way of reaching as many individuals in difficulty as possible. Now, this is intended to be a Florida foreclosure prevention class. So everything I'm going to be talking about is the foreclosure process, and it is a process. So the way I have this presentation, bear with me. I think I've done it in a way that is going to be easy for you to follow and easy for you to understand. I believe that I'm going to cover all of the major points and questions that you have. But of course, I'm going to pause at the very end for any questions you have. And you can either type the questions into the chat area, or we'll go ahead and give you the opportunity to maybe possibly unmute yourself so you can go ahead and talk to the group here. So let's begin with, it is a process, not a single event. And this is what I mean by this. Oftentimes when someone is served with foreclosure papers, they tend to believe that that's it, that it's game over, that there are no options. And at that point, that they need to leave the property and get out as quickly as possible. This is absolutely not true. There is a process. In fact, in Florida, it can be a very lengthy process, as I will explain. So unless the sale or auction date has already come and gone, this is your property. This is your home. Don't go. Don't leave. I think one of the worst mistakes that anybody can make is to vacate the property prematurely. There's a term in the industry called zombie foreclosures. And there's at least 1 million properties in the United States right now that are vacant and not being maintained and still owned by the property owners, the homeowners themselves. So if I can get that across to you, stay put, stay there as long as you can. And let's go ahead and fill you in on the rest of the process so you know what steps you can take. Now, Florida is a judicial state. Throughout the country, foreclosures are handled very differently. They're on a state-by-state basis. Some states are judicial, like Florida. Some are non-judicial, and some are both. By judicial, I mean that all foreclosure activity in Florida, all foreclosure activity must go through the courts. All right. It can't be done like in California, for example. They have the option of doing a foreclosure outside of the court system. That is not the case in Florida. So this is actually very borrower friendly. This is very homeowner friendly, because the plaintiffs, the lenders, the ones that are processing the foreclosure, have to go through a series of steps. And in Florida, it can take a while to go through these steps. So I want to walk you through those steps so we can try to help you pinpoint what stage in the foreclosure process you're in. Now, there's foreclosure that's initiated based on mortgage delinquency and mortgage default, which if I had to put a percentage on it, probably accounts for about 95, 98% of the foreclosures out there. But something that's on the rise, considerably on the rise, is the number of HOAs and condo associations that are foreclosing on the homeowners due to the homeowners not being current with their HOA payments. Folks, if you are not current on your HOA payments, let's say, for example, you're in default with your mortgage, and you're also in default with or behind on your payments with the association, if possible, do everything you can to get current with your association, because many associations across the state are being very, very aggressive in foreclosing on the properties. And that's because they want to take possession of these properties so that in many cases, they can go ahead and rent these properties out. Now, they may have the title for the property for a while, but eventually the mortgage company, the lenders, are going to get around to foreclosing on them. This is a simple and short and sweet message. If you can be current with your HOA, please do so, because there's a good chance you actually have more time to resolve your issues than if you don't get this done. Now, where does this start? Well, many years ago, during the great foreclosure crisis that we had, it was kind of the wild, wild west. There weren't a lot of regulations in place. And so there wasn't any consistency as to when the servicers or lenders could initiate foreclosure activity against a homeowner. But that changed with a federal law, and it's to your advantage because the servicers cannot, and I repeat, cannot initiate foreclosure action against a homeowner in default unless they are at least 120 days delinquent on their mortgage. So the way I like to explain it to my students is this: we get a 30-day grace period to make our mortgage payments. Come day 31, okay, you are technically in default. You are technically in default. Now, what happens is internally within that servicer, the bells and alarms go off and they say, okay, we got someone that's in default. Let's get letters out to them. Let's get phone calls out to them. But it doesn't mean that the foreclosure process begins on day 31. One thing a lot of folks don't know, because it isn't properly explained, is that the lenders do not want the property back. That's the last thing they want. They just want their mortgage payments to be made. They are in no hurry to foreclose on someone. So you can be even further into default than 120 days, and the lender may not have yet initiated foreclosure action against you. Now, it doesn't mean that you can relax or you have all the time in the world, because that can change overnight, but there is a process in place. So do the math. How many months are you behind? If you are at least 4 months behind and haven't had foreclosure action started against you, it can happen at any time. So what would happen? Well, the plaintiff goes through a process of filling out all the appropriate forms and filing a motion to go ahead and begin the foreclosure process in the county that your property is located in. And because of different things that have happened in the past several years, they've become pretty good at dotting all of the I's and crossing all of the T's to make sure that that everything is done according to the right process, so it will not be delayed. Now, in Florida, the act of serving this paperwork or notifying the homeowner is actually, once again, very borrower friendly. I've taught in states where all the lenders had to do was post a notice on the door, or maybe in a public location, like a government location, like say post office or something like that. No, in Florida, they have to personally serve the individuals there, or someone that answers the door that's at least 16 years or older. So, this becomes maybe sometimes a challenge for them to maybe serve someone that is not living in the property or lives in another country or another state. But eventually they can get exemptions within the process to go ahead and just publish the information in a newspaper so that the process can begin. Now, if you're taking notes, I need you to write the following down because it is absolutely critical. In Florida, once you are served, okay, you have 20, I repeat, 20 calendar days to respond to that process. Now, think about this. If you take that notice and you freak out and you tuck it in a drawer somewhere, you are just hurting yourself, because that just allows the process to continue to move very, very quickly. The advice that I can give you is to respond. Now, by responding, I mean going ahead and formally sending a letter, and something that you can do if you are represented by legal counsel, they can do this for you. A lot of folks have found samples of really good responses to less pendants by Googling for samples. You can even ask ChatGPT to do it. But almost anything that is sent in as a response stands a very good chance of slowing the process down. Let me explain it this way. By not responding, it's almost like saying, hey, you know what? You're right. You're absolutely right. Do what you got to do. Move as quickly as you need to. But by responding, by challenging this, it usually throws a wrench in the process and can end up buying you more time. Now, when I'm teaching real estate professionals to engage with individuals in foreclosure, one of the first things we have to find out is, have you been served? Have you been served? And this normally happens very, very quickly after the foreclosure motion has been accepted. So, if you're the homeowner, chances are you are aware of whether you've been served or not. And that means you are further along in the foreclosure process. Now, what then happens within the Florida system is, to avoid a lengthy trial, the lender, the plaintiffs, will typically file a motion with the court for what is called a summary judgment hearing. Summary judgment hearing. And they do this because they know that more than likely the judge is going to rule in their favor to go ahead and allow the foreclosure process to continue to the next step. The next step would then be the sale or auction. Now, sadly, what happens is a lot of homeowners that are facing this receive the notice of summary judgment letter and may never even open the envelope. Yeah, they may not even open the envelope, or they ignore it. And what they just did was lose an opportunity to potentially gain more time. Because if you go to that hearing and you basically put everything on the line and explain to the judge, whether this is you personally doing it or you're being represented by legal counsel, you stand a chance. I can't guarantee it, but you stand a chance to go ahead and possibly buy more time. Because what if you're trying to work out a modification with the bank and for some reason they didn't stop the foreclosure process? That could gain you more time. What if you have the property for sale, or you intend to put the property up for sale? That also can potentially give you more time. Sadly, a lot of my professionals, by the time they're contacted by a distressed homeowner, this has come and gone. So again, have you been sent this notice of summary judgment? If not, you have more time. If you have, and that's come and gone, and you didn't show, because when you don't show up, they're gonna grant everything in favor of the plaintiff. Let's face it, right? Now, this is the sad part right here. When it gets to the date of auction or sale date, in Florida now, it's done online. We used to say you go to the courthouse and the auction is done right on the courthouse steps. Now it's all done very professionally, very, very quickly in an online process. I hate to I don't want to make light of it, but I normally say this is game over time. Because if you haven't been able to stop this date, if you didn't take action to get this halted, to put a stay on the foreclosure, to get this date pushed back, and I'm going to talk to you a little bit later, so share some strategies with you on how you can accomplish this, you and or your attorney. Then once that sale time comes and goes, you are no longer the owner of that property. Yeah, you're no longer the owner of that property. Now, you're entitled to stay in that property up until that date. And then what's going to happen is whomever bought the property, whether it was an investor that bought it at auction, or in many cases, the bank, the servicer actually takes the property back. They take it back, and then they'll turn around. Maybe they'll fix it up. Maybe they won't. But they'll hire a local real estate agent to place it on the market, and they'll be in the MLS under what is called REO, and that stands for real estate owned. So we real estate agents, when we see an REO, we know that is unfortunately a foreclosure that has taken place. Now the bank is the owner, and the bank has the property for sale. Now, here's what happened to me one time, because I like to share examples of real life scenarios. I had sent some postcards out to distressed homeowners, reaching out to them saying, contact me, maybe I can help you. And somebody did, but here's the deal. I asked them, do you have a sale date? And they go, yeah. I go, when? And they said, yesterday. Yeah. And I went, oh, sir, if you had just called me the day before yesterday, I might have been able to help you. But I, as a real estate professional, I cannot do anything to help you at this point, because the foreclosure has come and gone. Now, let's talk about whether Florida has a redemption period or not. Uh, my answer is no, and I'll tell you why. In states like Minnesota and Michigan, the foreclosure process moves very quickly on the front end. They move very, very quickly into foreclosure. And you know why? After the foreclosure happens, after the sale happens, auction happens, the homeowner has a year to stay in that property and potentially redeem that mortgage, meaning win the lotto, find the money, and pay off that mortgage in full, and they get to keep the house. Yeah, they have an entire year to do that. Florida is not that generous, not that generous at all. In Florida, we have, I don't know, unofficially around 10 to 15 days. That's how long it takes to process that foreclosure. And then you're going to have the sheriff or the clerk of courts issue a new certificate of title. Here's the only advice I can give you. Again, not legal advice, but talk to an attorney. If you're in this period right here, if you think, okay, the sale date came and went, but it hasn't been 10 days yet, maybe through an attorney, if you can enlist their services, might be able to file a motion, maybe get before the judge, maybe they can put a stay on foreclosure, and maybe buy you a little bit more time. Maybe they can find some holes in the way the process was done. Maybe it wasn't followed like it should, and you might get lucky in that respect. But more often than not, when it reaches this level here, it is truly the end of the road. And then what happens is if you're still in that property, within a matter of days, maybe a couple of weeks, someone's going to reach out to you and offer you the opportunity to please exit the property, maybe by offering you some monies. They call it cash for keys. And essentially they're like saying, please go, will you go nicely? We don't want to have to get ugly about this. And if you go nicely and you don't tear the place up, we're going to write you a check when you go. So this is what my organization is trying to avoid. We're trying to avoid foreclosure at all costs because there are options to foreclosure. Now, as terms of timeline, what is in the book and what is in the actual real world can vary considerably. If you are at the point where you need to get legal counsel and seek the help of a foreclosure defense attorney, they are usually the ones that can give you the best indication of how long the process may be taking, because it varies on workload and availability of staff to go ahead and determine how long the process can be. If someone asks me, well, how long do you think once the foreclosure process starts, once the less pendant starts until I lose my home, how much time I have? I said, well, if it was 2008 or 9 or 10, you could have 3 or 4 years. But now, with the passage of HB 97, I think HB 87 a few years ago, they called it the Speedy Foreclosure Law in Florida. That process has sped up significantly. It may only take them 6 to 12 months to go from filing the motion to actually getting the person out of the property. Now, one of the things that I would love to make sure that you understand that if you have the belief, maybe you're frustrated, maybe you're angry and you're thinking, you know what, I'm done with this. Let the bank take the house. I'm just going to walk away. Well, I want you to really pay attention to what I'm going to show you right now, because there are significant, long-lasting, negative consequences to having a foreclosure on your record. So let's go ahead and start with the impact they can have on your credit. It's going to tank your credit. I wouldn't be surprised if you had a foreclosure on your credit that your credit score could drop easily 300 points. All right. And it's not something that goes away quickly. It can stay on your credit report for up to 7 years, folks. Up to 7 years. That's a long time. The only thing that can stay on your record longer than that is a bankruptcy. A bankruptcy can stay on your record for as long as 10 years. So this affects just about every aspect of your life, because when you have a foreclosure, you're going to pay probably more for just about everything, whether it's car insurance or home insurance or anything else that you have to finance. It's going to probably end up jacking the interest rate up significantly. And one of the things that I especially like to try to get across is I think the vast majority of homeowners that are losing their property right now would love to, in the future, be a homeowner again. I mean, why wouldn't you? I doubt that you will say, yeah, my goal is to go ahead and be a renter for the rest of my life. No, of course you want to have the chance to be in your own home again. But you know what happens if you have a foreclosure on your record? It can make you ineligible for a government-sponsored entity loan, like, for example, Fannie Mae, Freddie Mac loan, conventional loan. It can make you ineligible for one for 5 to 7 years. That's an awful long time. And you know what? There are folks that go through what's called a short sale, which I'll explain. And those individuals actually are able to buy again in as little as 2 to 3 years. So I think that should warrant significant consideration, because sometimes you're so fixated on what's going wrong with your situation right now. You're in this dark place right now, and no one's reminding you that there is a light at the end of the tunnel. I mean, my wife and I, we went through the bankruptcy. We went through all this. We know what it's like. We rented for a while, but by the grace of God, we're homeowners again. So we're a living testament to the fact that, you know what, you can recover. You can recover from something like this, but it's best to make good decisions now that don't hurt you or continue to hurt you after you lose the property. Well, not to mention that once you have a foreclosure on your record, when you go to buy again in the future and you're going to go fill out that 1003 form, you have to disclose it. It's going to ask you, have you ever had a foreclosure or deed in lieu? So it's kind of like there's no hiding it. And it doesn't say, have you had a foreclosure in the last 3 years or 5 years? No, it's in, have you ever had a foreclosure? So you're always going to have to answer honestly and say yes. And it right away puts you in a less advantageous position. All right. So we talked about credit scores already. Here's something you may not be aware of. It can have a significant impact on your ability to get a job or keep the job you have now. Because there are many employers that once somebody, especially if that individual is in a sensitive position around sensitive data or around money, cash, if individuals are in foreclosure or bankruptcy, their company policy might be that you are no longer allowed to remain in that position. So yeah, there are instances where people are, in addition to losing the home, they're let go or they cannot get the job that they wanted. You know, the example I like to use is with security clearances. You know, a lot of professions, you know, a lot of jobs, careers, you need to have a security clearance in order to do it, right? And a lot of times people think, oh, you have to be a secret agent in order to security clearance. No, you don't have to be a secret agent. You could be a TSA agent, right? Or you could be a pilot, or you can be a flight attendant, or you can be a military, or you can be law enforcement, or you can work in a title agency or in a banking business. All of these jobs, professions require security clearance. And here's what maybe no one's ever told you, that a foreclosure might nullify, might cause you to lose your security clearance. So what happens to your job at that point? What if, for example, the employer, let's say you are an airline pilot. You're an airline pilot and you work for this airline, you went through a foreclosure, didn't impact you at all. They didn't do anything. But now you want to change to a different airline, that the airline you always wanted to work for. And guess what? Their policy is, ooh, wait a minute, you have a foreclosure on your record. No, we can't hire you because we can't give you a security clearance. So those are the things that I need you to take a close look at, because it can hurt you, significantly hurt you. Now let's talk about pain after the pain, or adding insult to injury. You know, you lose the home in foreclosure and you think it's all over. You know, you're licking your wounds and you think, okay, fine, it's done. Let's get on with our business. And then you find out that the bank or banks are coming after you via what is called a deficiency judgment. See, in Florida, because Florida is a deficiency state, the lenders, after a foreclosure or after a deed in lieu, or even after a short sale, they have the right to come after someone for what they lost. for what they didn't recover. And this isn't properly explained. In many scenarios, it is not properly explained. So in Florida, again, I'm not an attorney, but I can read. Based on the changes with HB 87, they have 1 year. It used to be 5 years. It used to be a very long time, but now it's 1 year in Florida after it's all said and done for them to decide to go after you. Now, will they go after you? I don't know. I don't know. That's the thing, is when you go through foreclosure, there's no advocate. There's no one fighting on your behalf. There's no one speaking to the bank saying, these folks are broke. These folks don't have anything. Don't bother. You take your chances when the foreclosure process happens, and that particular lender may say, hey, you know what, let's go check and see how these folks are doing now. Oh, they're working again. Oh, look at that. Their credit's building back up. Looks like income is coming in. Maybe now might be a good time to go ahead and initiate some action against these folks. So I'm not really trying to scare you. I don't know how I can avoid scaring you when you're hearing about all this stuff, but I'm a big believer that you need to get this information because so often it's not being shared. Now, if all this wasn't enough, Uncle Sam wants their piece of the pie as well. Do you know that in our wonderful country, forgiven debt is taxable income? Yeah, let's say you owe 20 grand on a credit card and you get one of these services out there to get that 20 grand reduced to 10,000. Are you happy? You should, except when January or February comes around and you get a 1099 for the $10,000 that was forgiven. Now imagine in a foreclosure, right? Imagine in a foreclosure, the bank loses $100,000, $150,000, and you're lucky they decide not to come after you. That's a good thing, right? So what did they do? They forgave that loss. They're not coming after you. Well, forgiven debt is what? Taxable income. So now you're going to get a 1099 for 100, 150,000, whatever that number is. And you just had your best income year, possibly, based on this factor here. Now you owe taxes on that money, which can be significant. So I'm going to take you back in time. Back in 2007, because a lot of folks were going through this, they passed a law called the Mortgage Forgiveness Debt Relief Act. And it started in 2007 and it was due to go to 2010. They extended it by 1 year and then they extended it again by another year. And it helped, I don't know, hundreds of thousands of individuals that went through this scenario either not have to pay any taxes at all or had their tax liability significantly reduced. But it went away in 2012, right? It's gone. Well, something brought it back. It's called COVID. When they passed the CARES Act in 2020, they slipped this in. It's not called the Mortgage Forgiveness Debt Relief Act anymore, but the provision is called the Qualified Principal Residence Indebtedness Exclusion. I get tired of just saying that, the QPRI. So here's the deal, because I'm not here to teach a tax class, and you definitely need to seek the advice of a tax professional. But I want to give you some advice. I want to go ahead and say, look, you potentially have this hanging over your head, but if you qualify for this exclusion, you may get a break. And what they do is they've extended it, and basically they picked up from when it started in 2007 all the way to 2026. So I don't know what the future brings. Before you know it, it's going to be 2026. And are we going to be back where we were before, or are we going to get an extension? I have no clue. My crystal ball is very, very cloudy in that. Now, this is similar to the law that was in 2007, but it's not as generous. Okay, so here's what I mean. Here's a similarity, right? This never was put in place to help investors. If you're losing a short-term rental, an Airbnb property or something like that, I'm sorry, but this is not meant for you. That is not your principal residence. So this is for your primary residence. And it's for a loan that was used to purchase a primary residence, or let's say you took some money out in the form of a HELOC, or you refinanced and you took cash out. You're going to have to show that that money went right back into making significant renovations to that principal residence. So I always advise people, if that's you, make sure you have your receipts handy and everything else, because you're going to need to produce that, right? Now, here's the other way that it's not as generous. Back then, if memory serves, you could exclude up to $1 million if you were filing separately, or up to $2 million if you were filing jointly. This time around, the numbers are $750 jointly and $375 individually. So again, not as generous, but it's going to help significantly more people than if it doesn't exist. Let's say you don't qualify. Let's say this is not for you. It's not necessarily game over. Talk to a tax professional. Ask them, is there any chance that I qualify for what is called insolvency? Insolvency is just a fancy word for broke. And if you do, they can file this form called 982. So make sure that when you are interviewing or discussing this with a tax professional, it's a tax professional that has experience with the QPRI exclusion and also with Form 982 of insolvency, because that's what might get you out of the situation that you're in. There's also the possibility that bankruptcy might do away with that debt. So that is a question for both, or either a tax professional or a bankruptcy attorney. But again, make sure that you speak with a tax professional. You know, individuals like myself that work very closely with distressed homeowners, we don't work alone. We work in a team. And I surround myself with the individuals that do what they're best at. Foreclosure defense attorneys to help someone possibly stay in their home longer. Tax professionals to help them with this. So oftentimes, if you do not know of these individuals, speak to a knowledgeable real estate professional, especially if one of them invited you to this call, this webinar. Contact them, because they can put you in contact with individuals that can potentially help you. All right, so let's discuss what alternatives are there for keeping your home. So that's our goal. We want to do everything possible for you to stay in your home. Now, as I go through this, you got to think, well, I tried that, it didn't work, they said no, maybe I didn't try this, maybe I should. But let's start with reinstating the loan. This can be a viable option for someone that became delinquent on their mortgage for, say, the reason that they lost their job. You know, unfortunately, most Americans have very little to no savings. In fact, there is a survey that came out a few months ago, and only about 40% of Americans have at least $1,000 in a savings account for emergencies. Yeah, I know we're living paycheck to paycheck in this country right now. But let's say you go 2 or 3 months behind, you find another job, and maybe through friends and family helping you out, you're able to put the money together to get current, right? That's a good thing. You just have to reach out to the lender and explain what happened and say, look, here's the situation. I have the money now. I can pay you off. Now, I wish it was as simple as take your payment, your monthly payment times 2 or 3, and you're done. No, there's going to be probably some fees and penalties that are added to that. But once you get that payoff number, that magic number, you can wire that money into them. And no sooner than receive it, and then you're golden again. You made them whole. You are no longer in default. And maybe they hadn't even started a foreclosure process yet. Now they won't. Maybe they had initiated foreclosure action, and now they'll have to stop it because you are back current on your loan. Now, sadly, what happens is the more months that pass by, the less likely a person is to be able to do that. Once, I think the number is 4 to 6 months. Once you get to 4 to 6 months behind, it becomes very difficult to come up with the cash to get caught up, unless you're able to work out a forbearance agreement with them. Now, forbearance, the definition that I'm going to share with you is very different from what you might think forbearance means because of COVID. Remember, during COVID, we didn't know what was going on. The government basically told folks, you know, listen, you can't make your payments, don't make them. Or basically, if you don't want to make your payments, don't make them. And it started off with 6 months, and then it went to 12 and 18 months. And I think in cases of FHA mortgages, it actually went to like 24 months that folks didn't have to make their payments. And then when it was all said and done, there's folks that exited out of forbearance just fine. There are folks that are still in it. There are folks that are in default. And there are folks that worked out an arrangement with the lender. And let's say that you ended up with $15,000 or $20,000 in payments that you didn't make. You were able to work out something with your bank that allowed that money to go not on the back of the loan, but like a separate loan that's sitting there waiting for you, interest-free, being real quiet, so quiet that you might even forget that it's there, but it's there. You didn't get to walk away from those payments that you didn't make. It's just sitting there for when you do sell the property or you do refinance the property. So that's becoming an unpleasant surprise for a lot of folks out there. The forbearance that I'm referring to is that same scenario that I just told you about right now before. What if you don't have a friend or family member that can give you all the money to just reach out to the bank and say, what do I owe you? I'll stroke you a check. Well, don't give up yet. Talk to them and say, well, can you work something out with me that I can make those payments to you over a period of time? Maybe they can give you a year, 2 years, maybe 3 years to do that. Well, you don't ask, you won't know, right? So let's say they go, well, maybe what they're going to want to know is, tell me what happened that caused you to go into default and tell me why you think that you're okay now. So let's say, for example, you went into default because you lost your job. Well, what's changed? I got another one. Well, that's good. But then they want to know, what are your bills every month? What is your income every month? Because you're going to have to almost like get reapproved for the loan all over again. And here's the thing you got to keep in mind. Your mortgage payment is going to go up because it's your regular mortgage payment plus whatever that number is divided by the number of months. If you're $6,000 in the hole or 7,000 in arrears, it's spread out over those months. That's going to raise your monthly payment by maybe several $100s. So you have to be able to prove that you can go ahead and handle that. If they say okay, then the foreclosure is put on hold. It doesn't necessarily go away. It's put on hold because unfortunately, a lot of folks that go into a forbearance repayment plan end up redefaulting again. And they're not very forgiving when you redefault. It's almost like, okay, we tried to help you. You didn't help yourself. Now we're going to go right back to where we started. Not where we started necessarily, where we left off. So again, that's called forbearance or repayment plan. Something to keep in mind, these conversations should really be you with the lender. You with the lender. One of the biggest problems we have with foreclosure cases is that the homeowners never ever respond to the letters or phone calls from the servicers. Back in 2008, 9, and 10, when we had the most foreclosures ever, I think the number was about 50%. About 50% of foreclosures, the homeowners never ever had a conversation with the banks. Who knows what could have happened if conversations were to take place. So not contacting them is not a strategy. Or if you think it is, it's a terrible strategy. Now, loan modifications, these were very, very popular during the great financial crisis because the banks were incentivized by the government to go ahead and work deals out for people to be able to stay in their homes. Those don't exist anymore. They're not in place anymore. So are banks doing modifications? Yeah, they are. But be careful. One thing about modifications is who's doing the modification. There was a lot of scams and people ripped off it in the old days. People say, hey, I can help you. I can help you modify your loan. And they would charge money up front, $1,500, $1,000 or more, and do nothing, absolutely nothing, or maybe disappear. And then the government got involved. And now in order to negotiate a modification, you have to have like a loan officer, a mortgage loan officer license to do it. Attorneys do this. I would recommend that if you can't do it yourself, if you don't feel comfortable engaging in this modification process yourself, hire an attorney to do it, right? But you're really reapplying again. Now, here's what an honest attorney will tell you. If you sit down with an attorney right now and say, would I be eligible? Would I have a chance of getting the bank to modify my loan? One of the first questions, if not the first question they're going to ask you is, how much income is coming into the household right now? Well, let's say you're not working, or let's say you're not making enough money. The chances are between nil and none that they're going to approve you in that scenario because you cannot verify or confirm that you can make or afford the monthly payments. And that's sad. I know it's sad, but hey, if your situation is, yeah, I got in this mess because I wasn't working, but now I'm working at a great job. I can make the payments going forward if just given a chance. Then by all means, you need to try to get a loan modification going. One of the great things is once you are formally in the loan modification process, they have to stop the foreclosure process. They can't do what is called dual tracking. That used to happen before. They were trying to work out a modification with you over here, but then the foreclosure was still moving forward over here. It's like, what the heck? I'm trying to do something. Why are you doing it? They can't do that anymore. So that will buy you more time. Now, keep in mind that if you have a 3% loan right now, and you're not able to make the payments on a 3% loan right now, if you were to get a modification right now with the higher interest rates that we have right now, your payments might be significantly higher. Here you did a modification with end result being higher payments. So that's something that's affecting the number of loan mods that are being done right now. Now, don't think in terms of reducing the principal balance. It doesn't. That's why back in the day, when a lot of properties were underwater, meaning that they weren't worth what they owed more than they could sell it for. A lot of folks were like, well, if I do a modification, will you get rid of some of the balance? And I said, no, you're still carrying that balance. We'll put it on as a second loan in the back of the loan, but you're still going to owe that money. Now, bankruptcy, not an attorney. Bankruptcy is not a way to stay in your home indefinitely, but bankruptcy is a strategy to delay the foreclosure process. So I'm going to talk a little bit more about this later, but it is a strategy when push comes to shove and you're out of time and the court's not willing to work with you and grant you an extension on that time. It's not game over yet. There's still one more card that you can go ahead and play. All right. Now, let's go ahead and discuss here so I can see. Now, to stay in the property, you might be tempted to say rent it. And this is a scenario that I use in my classes. Let's say this beautiful couple says, you know what, the last thing we want to do is lose this home. We talked to mom and dad. They said that we can move in with them for as long as it takes. And we did the numbers and we think that we can rent the property out and cover that payment until we get back on our feet. Okay. Well, as a real estate professional, I get approached, or I can get approached by somebody that wants me to help them rent the property in that scenario. And one of the first things I teach is, have you really factored in all of the expenses that go into the mortgage payment? I mean, you are talking about principal, interest, taxes, and insurance. You have factored all this in there and you think you can rent it for enough to cover that? And let's say they say, yeah, we did the numbers. We absolutely can. I go, what happens if the people don't pay the rent? What happens if they run into a financial difficulty and they cannot make the rent payment for a month or 2 or 3? What happens then? Yeah. What happens if the air conditioner breaks down? Folks, if you're in Florida, especially South Florida, we're going through a heat wave right now. It's insane. It's like 95 degrees out there with 100% humidity. It rained today with 95 humidity. It's crazy. So what happens if the air conditioner goes bad? As a landlord, you're required to fix that like this. You got the 10 grand sitting there in order to do that? Well, if you don't, that could be an issue. Vacancies happen. And here's the thing you have to be so careful of, folks. If you are 1, 2, 3, 4 months behind on your payment, and your goal is to possibly rent it to these tenants over here, and you are not going to be able to get current with this payment, you are not going to be able to stop the foreclosure process. If your goal is not to take the money from these folks to get caught up over here, then what you're doing here, if not illegal, is borderline illegal because it's called rent skimming. Because what's happening is, and it does happen, and this is why I teach real estate agents to protect their tenants, is a tenant should always ask for proof from a landlord that they are current on their mortgage payments, that they're not in foreclosure. Because sadly, many times when there's a knock on the door from a process server, it's it's a tenant that opens the door. So I do not recommend going that route unless you know you're going to be current on your mortgage. Well, those are the alternatives for being able to stay in your home. What I need you to do is, have you considered all of these we talked about? Have you checked them off and said, yeah, we talked to the lender, nope, can't do that, can't do that, can't do that. Let's say you're starting to think we're at the end of the road. What alternatives do I have to exit the property? You remember a term I used earlier, I said exiting with dignity. That's a big thing for me. In my classes in 2008 and 9, we would show a video of an individual in New York getting evicted by the sheriff. It was terrible. I mean, it would bring tears to the people in the audience because I think some of them went through it themselves. So that's the last thing that you want to go through. That's the last thing I want you to go through. So this is the first thing you can do. Sell the property. Now, I'm not saying that lightly. I know this is your home. I know this is what, you're raising your family and everything else, but here's something I need you to pay attention to. Something very different is happening this time around than from 2008, 9, and 10. Back then, for every 10 homes that were going into foreclosure, 6, 7, maybe as many as 8 of these properties were underwater. More on that later, but they were underwater. They owed so much more on the property than they could ever remotely sell it for, because property values took a huge dive back then. So these were all potential short sales. These were situations where even if we were successful at getting a short sale done, the homeowners would not be walking away with any money. There was no equity to walk away from. That is very different this time around. In some cases, some of these folks, maybe you, are sitting on significant equity. Now, if that is the case, never ever let the bank take your home, because at the end, they can't keep your equity, but it's going to be whatever your equity was minus all of their fees and penalties and all of the expenses that went into them taking that property back and selling it and everything else. Essentially, you're going to potentially net significantly less than if you had just listed the property for sale with a knowledgeable real estate agent. So let's back up a second. If you have no choice but to exit the property, if you have equity, reach out to a knowledgeable real estate professional, the one that invited you onto this call, and talk to them, because what I teach is this is a regular sale with urgency. You don't have to go through a lot of the paperwork that short sale people have to go through, but you have to keep an eye on the clock, because you have to get the sale done and closed before the sale date happens. A good real estate professional helping somebody in this situation will want you to produce a payoff amount, or they'll ask you to sign an authorization letter so that they can contact your lender and verify what is owed. They'll get their title company to do a lien search and verify that you don't have any additional liens against the property that you forgot about. Yeah, that's happening every day now. Somebody's going to the closing thinking they're going to net X amount, and it goes down to here because they had a partial claim mortgage or they had a forbearance against the property. So we don't want any surprises. We want to do a lien search so we know exactly what encumbrances that property has. And then talk to the lender. If you're in foreclosure and you have equity and you put the property up for sale you or your realtor should be in communication with the lender immediately saying, hold on a second, I got great news for you. You're going to be made whole. When this is all said and done, you're going to get all your money. The property is listed for sale. Here's proof. The property is not only listed for sale, here's a contract. Here's proof. I just need you to slow down. And if there's a sale date, I need you to cancel that sale date or at least postpone that sale date because I'm going to make you whole. It is one of the most logical arguments that you can give to a lender to slow their roll on a foreclosure and give you more time. But never, ever lose sight of the auction date. That's kind of like this thing looming over your head the entire time. Now, there's this thing called deed in lieu. And deed in lieu is kind of like a friendly foreclosure. That's when you voluntarily give your house to the bank. It's kind of like walking into the bank and saying, hey, guys, let's not do this whole foreclosure thing. Let's not go through all that nastiness. Here are the keys to my house. Here, take it. You think they go, okay, man, thanks. No, they're going to say, hold on a second, sir. Here's one. To keep your keys. We're not in the keys business. We're not in the business of taking over properties. We just want our payment. So if you can't afford to be there, sell the house. List the property for sale with a knowledgeable real estate professional and sell it. Oh, but I'm underwater. I was told I don't have any equity. Well, that's okay. List with someone that knows how to do short sales, and you can potentially get out of the situation. So what you're saying is you don't want my house. I go, no, I don't want your house. And let's take a look at this. Some of the consequences to this. One, it kind of shows up on your credit report like a foreclosure. It's every bit as damaging as a foreclosure. Do you know that if you have multiple loans, or probably won't even consider it? Just think about it. Why would the first spend money to make the second whole so that they can lose money on the, you know what I'm saying? So that usually wouldn't happen. And here's the mistake a lot of people made back then. If this is even a remote possibility for you, please consider the following. If the paperwork that's produced that you have to sign to do a deed in lieu doesn't include a waiver of deficiency, that bank can potentially go after you for a deficiency judgment. Yeah, there were a whole lot of folks that did not pay attention, just signed whatever the banks put in front of them and got a really nasty surprise. Also, in a deed in lieu scenario, and they forgive the difference, right? They say, okay, we're not going to come after you for the difference. Remember what I mentioned about Uncle Sam? The forgiveness of debt is potentially there. So, if you had netted the bank more money, then they're forgiving less money. And so that would make your tax consequences less. For those reasons and a few others I don't have time to discuss, deed in lieus are typically not in the best interest of the homeowner. Again, it's a situational thing. It can vary from homeowner to homeowner. That's something that you can explore. But my experience has been it's typically not something that's in the best interest of the homeowner. Once again, bankruptcy can stop the process for a while. In fact, when you file a bankruptcy, it puts a stay on the foreclosure. You just got to do it up to a minute before the sale date, and it stops the process cold. But here's what happens. The banks are already prepared for this. So no sooner than the stay of foreclosure is issued, they'll file a motion to lift the stay, and they'll get it. But what it did buy you was time. It did buy you time. So if you had equity, now you can go ahead and sell the property. If you don't have equity, we can still work out some kind of a short sale for you. I urge you, and I'm not a bankruptcy attorney, but be wary of how quickly bankruptcy attorneys recommend bankruptcy. Keep in mind, that's how they make money. And what I have taught for years is if your main issue is you can't afford your mortgage payment and you instantly file bankruptcy without looking at other options, I look at it like in Florida. In Florida, our state bird is the palmetto bug, the roach. They have wings. And if you've ever used a hammer to kill a roach, come on, let's be honest here. That was overkill, wasn't it? I mean, couldn't a shoe do, a chancleta, a heavy book? So when people rush to bankruptcy without considering The consequences, like it being on your record for 10 years, it may not have been the best decision for you. So talk to professionals before you rush into any decision. Now, at least 3 times I've mentioned the word short sale and I've given a quick definition, but when a property, the balance on the property, the loans on the property, the encumbrances far outpace what you could sell it for, then the property is underwater. And there is a misconception in the industry that there are no short sales out there. Well, yeah, they are. They are, because folks that bought in the last 2.5, 3 years, they're the ones that are most vulnerable because they bought at the very top of the market. If they bought at the top of the market and they put very little down payment, they had very little equity to go in. Maybe these folks borrowed their equity already. See, I believe a lot of Americans use their home as an ATM machine, and they've gone in and they have pulled money out because during COVID, the refinance boom was insane, right? People were refinancing once and twice, and they were pulling cash out, or they're taking home equity lines up to 95% of loan to value. Well, that's using up your equity. So sometimes people are in for a rude awakening. So if somebody is underwater, the most logical thing to do, since you have to leave the property anyway, is to put it up for sale with a knowledgeable real estate professional that knows how to do a short sale. And in a short sale, we are basically getting a contract and approaching the bank. Now, think about this. Have you ever had anybody owe you money? You wanted to get paid, right? Well, the banks want to get paid, but here's what we're doing. We're going to the bank and saying, these folks are in a tough position. They can't afford to pay. They'd like to get out as honorably as they can. Will you accept this lower amount and forgive them and let them go about their business, let them continue with their lives? It's a tough argument to make because they're going to lose significant money, but the banks do them. Why do the banks do them? Because they know that the longer this property sits there and the longer the whole process is extended, the more wear and tear, the more damage to the property. So in essence, they end up losing more money the longer this process continues. When we are successful at getting a short sale approved, then the bank is willing to allow title to be transferred to a new buyer and allows the prior homeowners to leave and have a fresh start. Now, short sales are not a get me out of my mortgage free card. They're not for everyone. You have to meet the qualifications. For example, there's got to be a hardship. That means some kind of material change that's happened since you took out the mortgage until now that prevents you from paying it back. Folks are going through this every single day. If you're in default right now, it's probably because of one of these reasons or a combination of these reasons. You have to show your financials because you should be able to prove that every month you have more expenses than you have income. And remember that term insolvency I brought up earlier, which is a fancy word for broke? The ideal candidate for a short sale isn't sitting on a ton of money in a savings account. People will say, hey, it's my IRA or my 401k in danger. Well, no, because these are protected funds. They're retirement funds. They can't be seized by the bank. But when you're asking the bank to lose money, and they know that you have money tucked away in an IRA or 401k, they may ask for a contribution in order to let you get out from underneath the situation you're in. So that's there. And again, I don't want to get too deep into the weeds. That's a conversation for you to have with a knowledgeable real estate professional. Now I'm winding up here, but I want to show you some strategies for delaying the sale date, auction date, because maybe that's the situation you're in right now. In Florida, because it is a judicial system, you have the ability to go in and ask for an emergency hearing before the judge. Now, this could be you or your attorney. It should not be your real estate professional. Your real estate professional can drive you there. They can sit there and hold your hand for support, but they're not allowed to act as though they're representing you in any capacity that resembles an attorney. So if you don't feel like you are in a position to do this yourself, contract what is called a foreclosure defense attorney. Just because you can doesn't mean you should. Any attorney could do this, but I wouldn't trust it to any attorney. I want an attorney that specializes in foreclosure defense, an attorney that has a great relationship with the plaintiff's attorneys. I want an attorney that has a great reputation and is well respected by their peers and the judge. You know why? Because there's never any guarantees, but the odds definitely swing in your favor to potentially get the judge to push back that sale date if it's represented by an attorney, especially if that attorney goes in with a purchase contract, because they're going to ask you, look, I need as much ammunition as possible. If you're going to sell the property anyway, let's get it under contract, and I'll go in and show the judge the contract, and I'll show the plaintiff's attorneys the contract, and I'll say, why not give these folks a chance to get out with some dignity, right? Now, I want to warn you, when you ask an attorney to buy you more time, they typically will ask two questions. They'll say, well, do you have a purchase agreement? Okay, that's this. And they'll say, have you had any extensions before? See, what happens is there are folks that have, become aware of the different strategies, and they've implemented these strategies. And what happens is the more times that you filed a motion to push back the sale date and it's been granted, the less likely you are to have it granted again. It's kind of like if you go to the well too many times, eventually you come up dry. So that is an option. The other option is, I mentioned, filing an emergency motion petition for bankruptcy. Now, again, I'm not a bankruptcy attorney. I'm not giving you advice, but some of the strategies I've seen people implement are what is called skeleton or shell bankruptcies. These are individuals that are not represented by a bankruptcy attorney, but have filled out the bare minimum paperwork and paid the filing fee to at least get the process started. And by doing that bare minimum, they're able to go ahead and stop the foreclosure process, granting them more time. The downside to that is, yes, it can and potentially appear in your credit report as a bankruptcy. But people that I've met that have implemented this strategy to avoid a foreclosure and sell the property have said it was worth it, because they were able to buy again sooner and get back to home ownership more quickly. Just remember this: bankruptcy does not equate to a free house. Bankruptcy does not equate. Now, I'm being a little bit general here because there's other things. I've been talking about bankruptcy like Chapter 7, which is total liquidation. Maybe you qualify for Chapter 13, which is the ability to reorganize your debt. These are conversations to have with a bankruptcy attorney. Okay, a real estate agent is in no position to advise you what course to take. We're just presenting options for you to explore. Now, one more drink here. Now, if you are active military, maybe there's someone here, but from a training perspective, I want to share this. There is this thing called the Service Members Civil Relief Act, SCRA. And this helps individuals that are active duty members. Now, I wanted to be sure I explained this the right way, and I've heard different definitions. I mean, what is active duty? Does active duty mean deployed? No, the definition of active duty is a full-time soldier, a full-time military person. That is what active duty is. Now, if you are in the reserve component, but serving in an active duty role for a period of time, you may qualify for this. If you're in the National Guard and you were mobilized under federal orders for longer than 30 consecutive days, you may qualify for this. And there are a couple of other provisions in there. Let me tell you where this was really, really impactful. During Desert Storm and when we went to war, a lot of the service people were actually reservists. They were National Guardsmen that were doctors and lawyers and high income earning people. All of a sudden, they found themselves in active duty, deployed on the other side of the world. And guess what? The income from the military in no way, shape, or form was able to cover their mortgage. and they were hurt badly. So when this went into effect, and again, I'm just giving you a cursory explanation here, some of the things that impressed me about this is if you qualify, and now here's the thing, if you read all about this, they'll tell you this is debt that was incurred before you were active duty. That keeps coming up. You can't be active duty, get into a debt, and then be okay. It's kind of like before active duty, but there's a limit on the interest that could be charged. Oh, I remember the scandal that happened in 2009 or 10, when several of the big banks were caught red-handed because there were military people that should have had their interest rates reduced to 6% and or no more than 6%, and they had not done that. Or they outright foreclosed on their property because there's protection against default judgments, there's protection against foreclosure. Yeah, if you are active military, you stand an excellent chance of being able to implement this strategy to go ahead and halt the foreclosure process. So these are some things that if you are active military, here's what you have to do. If you're active military and you're in foreclosure, reach out to your local or closest military legal office, so that they can guide you and help you to potentially buy you more time or stop the foreclosure altogether. All right, folks, I've covered a lot. Let me see if there's any questions here. All right, I don't see any questions here. So either I was so incredibly thorough that there was no room for any questions, or you pretty much are watching the news and not even paying attention to what I'm saying right now. But I get it. Sometimes in these environments, people kind of hold back and they're like, I'm too shy, I'm embarrassed, I don't want to do it. That's okay. That's okay. Let me kind of give you what you need to do next. In my humble opinion, what I'm going to ask you guys to do next. Number one is take out your pen and pencil because this is your homework assignment, okay? Find out, confirm what stage of the foreclosure process you're in. Based on what I've already shared with you, find out what stage of the process you're in, okay? If you're not sure, a good real estate professional can help you with this as well. Find out if you have an auction or sale date already set. See, understand something. Once the les pendants is filed, it's now public knowledge. You can't hide it anymore. It's public information. If you go to the circuit court website in whatever county you're in, there's a foreclosure section and there's a foreclosure calendar. So you'll be able to do a search by your name or address or docket, file name number, and find out if a date has been set for this. Because let me tell you something, what happens in the real world all the time, a CDP will reach out to someone and say, folks, I'm knocking on your door because I just found out by doing some research that your sale date's coming up next week. And you know what happens in many of those scenarios? The homeowner had no idea that that sale date was coming up. And they might even be represented by counsel and still not be aware that in a week's time, they lose their home. So, hopefully this date hasn't come and gone like that guy that called me, all right? Seek legal assistance. Once again, if you are in the foreclosure process and you're looking for options to try to stay in your home or slow down the foreclosure process, then seek out the assistance of a foreclosure defense attorney. Foreclosure defense attorney, someone that specializes in this area. If you don't know anyone, I do. Reach out to me or one of the agents that invited you onto this webinar, and they'll be able to refer you to someone. If you haven't talked to your lender, please do. Contact your lender. So often just getting them on the phone and being transparent and explaining what's happening to them might be all it takes to get them to slow their roll a little bit. But maybe you qualify for modification. Maybe you qualify for forbearance. Maybe they're willing to slow the process down to give you a chance to hire a real estate professional and get your property on the market and get it sold. Speaking of which, don't work with just any real estate agent. Okay. There's different specialties in our field. Uh, Agents that I teach every day, truly, most, if not all, have a heart to serve people in this situation. A lot of them went through it themselves. Training is important. I'm very proud of my certified distressed property experts. I cannot guarantee that they will never make a mistake or anything, but at the very minimum, they've made the effort. They applied themselves to getting the training that in many situations puts them far above a real estate agent that's never ever even gone to a class on helping folks avoid foreclosure. So if someone like that invited you onto this webinar, go ahead and reach out to them. Now, if push comes to shove, no real estate agent invited you on this call. You found out because you saw a post on Facebook or social media or anything like that. Okay, call me or write to me, and I'm going to put you with someone on my team at the very minimum and introduce you to some of these people that might be able to help you. And if the best course of action for you is to put your property on the market as a regular property, as a short sale, we're going to do the very best for you. And you're going to be in very, very good hands. Don't be afraid to reach out and ask me questions. Okay. My answering your questions is never going to be predicated on, well, you're going to list your property with me, right? No. I consider every time we keep someone in their home to be a major blessing and a major success story. But when we can't do that, second to that, helping somebody exit with dignity is what we're all about. I hope that this webinar has been informational. I'm sorry, informative. I'm sorry if I went quickly. I just know that it's hard to keep people's attention. Keep in mind that a recording of this will be available. Reach out to the agent that invited you onto the call. They'll have the recording available. And then again, here's my contact information down here, just in case you want to speak to me or write to me personally. Let me see. I have a question here. And if, okay. Why, if someone have a sale date and have equity, if they have a listing agreement, can they stop the date? Well, I'm not saying a listing agreement won't do it. What I'm saying is there may be some other mitigating factors. For example, you never know the temperament or the mood of the judge on that particular day. If it's an individual that has gotten significant, quite a few extensions in the past, right? They've bought themselves a lot of time, multiple extensions. Now all of a sudden they show up after all these extensions with a listing agreement in their hand, and it's dated from the day before. A judge might look at this and say, nah, this is not working for me. So what I teach is based on the feedback that I get from actual foreclosure defense attorneys. I'm not saying it's impossible to do it, but wouldn't you want to go in there with as much ammunition as possible to get the job done? So that would mean ideally having a purchase agreement. And if yes, how long would they give to find a buyer? Well, keep in mind that an extension could be a couple of months, 3 months, 4 months. It really comes down to what the attorney is able to negotiate with the plaintiff's attorneys, right? And here's where relationships come in. They know each other. Hey, what do you got for me? Well, I got this individual that's going through this right now. There's equity in the home. They want to sell it. You guys are going to be made whole. I just want you guys to give them 6 months so that they can get this thing sold, done, and out. Well, 6 months seems like an awful long time. I mean, they've been in the home now 1.5 years without making any payments. Yeah, I know, but just keep in mind, these folks are trying to do the right thing and you're going to be made whole. Why rush to foreclose and cost your client more money? You're going to be made whole. Now, or the argument is it's underwater and they need a short sale. Well, short sales can take longer, so we need more time. So a good attorney is always going to fight for as much time as possible, but it ends up being negotiated. And then it goes before the judge, and the judge will decide to say, okay, if you guys are both cool with this, I'm cool with this. Or the judge may remember these folks from before and say, oh, I remember you. Yeah, no, I'm not going to do it. And that's why I always tell people, I always teach, never say never and never say always. You always try this approach first. If it doesn't work, you still got the one card that you can play, and that is the bankruptcy card. Anyway, folks, I think that's enough for right now. I hope this has been of value to you. Please, please, please do not give up without a fight. I truly mean it when I say foreclosure is not the only option. Seek help, talk to someone. And I hope and pray that we're able to help you to go ahead and minimize the negative consequences and help you get a fresh start. Thank you. Bye-bye.